Hello everyone, how's it going? I hope that you had an amazing day and a very profitable day with Palantir in particular. Now, with the amazing run that Palantir is having right now, it's not that difficult to imagine that, if you're a Palantir holder, then you must be pretty happy with where things are going. But always remember that the market will have good and bad days for us. So, just like when the bad days are not necessarily the end all be all, it's the very same with the good ones. Now, if you have decided to watch this video of mine and, as you click on the thumbnail, chances are you're also wondering about the same question, which is this. Where is Palantir going from, the current run? And can you start buying now? Or should you start buying now? How high can Palantir go? Now, as we know, over the past few years, the job market has been pretty dim, right? And on the other hand, the rising inflation has been melting away people's savings in economies that for a very long period of time used to be deflationary. So when all is about to whittle away, when all certainties disappearing up in the chimney, we have to learn how to rely on ourselves and not just the uncertainty of fate. In order to secure our own financial future, that is, we have to find the growth opportunities of tomorrow and seize the ones that can multiply our capital exponentially, increasing the money available for investment later. Essentially, we gotta find the golden goose. And for many, Palantir is exactly one of those. So over the past few years, things have not always been great for people who have been holding Palantir. But it became so much more than just another tech stock collecting funding in exchange of market share growth, like so many more that are listed on Nasdaq. It's a major player on another league of itself that almost plays the role of the canary down the coal mine. It has enough clout and mystery around it to arouse the market's curiosity and people's tendency to follow the trend. It's a company that people would often view equally as like the symbol of risk appetite in the market. In other words, how curious people are, how hungry the capital is, and how attractive the equities, and especially the speculative equities, are, alongside stuff like Tesla or Apple. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful tool that can serve as a prediction portal to us, a bit like a crystal ball. So in this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Now, before the video continues, if you want to watch more Palantir related analysis, as well as for many other companies that I cover on this channel, please take a look at my channel page, especially to like the playlists that I organize my videos into. With that being said, thank you for your stay. I hope you enjoy it, and let's get started. So, Palantir today had a pretty stable day on the market. It reached a high of around $24.50 and a low of like $23.84. Over the past 5 days, the stock mostly moved like sideways with a strong tendency upward, decreasing by about 1% and a ceiling at around $25. Previously, it was around $24, but now that ceiling has been, I believe, it has been surpassed. So it seems like the share price is now beyond the critical level of the $20 for good, which is a very critical level because Palantir tried to move beyond that in any sustained manner for a very long time, but failed until recently. And in the big picture, Palantir is now trading near its 2021 level, which is definitely a very positive aspect to consider given how low its share price went down at one point. In fact, at this point, it's very useful to take a step back and to remind ourselves how things were back then. Just maybe just 1 year or 2 years ago. Basically, as the market saw Palantir, the Palantir pricing going below $7. Well, you know what? Maybe below $8, a lot of the negative news started to circulate. And just like how positive they are nowadays, they used to be very bad in a not so distant past. And this should serve a lesson to us, in my humble opinion. Like, it should be something that tells us that sometimes the news coverage of Palantir is not something that that is super reliable, shall we say. I know that I'm doing myself like a major disservice here, but I try to stay at least honest. If over the past few years I haven't always been consistent with my views on Palantir, because the market moves, so does my opinion on the stock. But back then, as the stock moved below like $8, my first reaction was to buy, because I don't believe that the news coverage is always equal to the reality. And same should be said now, right? We are in this AI craze at the moment, just like we've had the EV craze back in 2020. Is it going to sustain itself? Is it does it have substance? Is it going to change the way our economy works forever? Possibly. Possibly. There are many tools that I can definitely see that will change the way people work, especially in terms of entertainment, storytelling, script writing, and so on. So definitely there are substance beneath the glossy surface, but at some point, is there a little bit too much gloss as well? That is something that we also have to think about while Palantir tries to reach back to its former glories, and now it's really going. It's really trying to reach back to the $35 level, right? We cannot say for sure whether they're going to be able to make it, but we can clearly see that they're trying to make a go for it. Now, what if one day we suddenly realize that, oh, you know what? I'm not sure about the AI anymore, right? Oh, is it just like a calculator of words? Is that what ChatGPT is all about? And by the way, how is Palantir, a company analyzing data, gonna make money on AI like for real? We're not saying that Palantir is gonna be, having losses from now onwards, but is it possible that in the end they will abandon the AI project and to move on to other things? The other things that so far they've already been doing and that they may continue doing. So these are the questions that, as we are in a positive environment, we have to think about, because it feels good to be right. It feels good to enjoy the bull run. But it's also in moments like those that we have to think about, when is the top going to be reached. In fact, if you take a brief look at Nasdaq is trading very high, historically speaking, in a very wobbly economic environment. In an environment where a lot of the tech companies are shredding off their staff like there's no tomorrow. So seriously, I do believe that we have to take that into consideration while considering that Palantir is a pretty valuable company on its own. And in fact, it's going to be a even more valuable company given the fact that we're probably going to see some sort of interest rate cuts, right? But that's not going to prevent any sort of major corrections that are based on fundamentals and not just on the purely financial aspects, shall we say. So Palantir has been catching the attention of everyday investors like you and I for a few very obvious reasons, like its perceived potential for high growth, the fact that its business model is actually working, right? The fact that because of its business model that actually works, there will be minimal dilution. So regular investors often look for stocks that can grow a lot, and Palantir seems to fit the bill. The company has a pretty eccentric and controversial history. it's kind of mysterious. People don't always know what they do, which, by the way, is basically a major dashboard for your corporation's operations, and try to find like patterns, try to find causality, trying to find relationships and correlations between different aspects, so that like the operation can work better. So regular investors look at Palantir as this something, this ambiguous gold, really, that can one day grow into something that's even better than what it is now. So that's the first aspect. The second aspect is, like I said before, the business model. Like I've been saying that since maybe last year or the year before. They have positive gross margin. What this means is that whatever they're doing gives them more money than the immediate cost associated with this operation. In other words, they just have to scale up and they will be making money for sure. Like on paper, there's no way that they won't be making money. And very soon that became like a reality. And of course, AI craze also came and they seized the opportunity. So this is why we're having Palantir where it is now. Now, with that being said, nothing and no one is perfect, and no stock is perfect, and Palantir is one of them. So Palantir's the downsides of Palantir are also quite obvious. The fact that we don't always have like the easiest explanation regarding the business model is one thing. The fact that they work with something that's actually highly sensitive called data, and shall we say also like the safeguard of privacy, like that kind of stuff tickles a lot of people's mind. And I wonder if one day people are going to suddenly wake up and be like, oh, you know what, I'm not sure if I want to pay into my own surveillance. You know what I mean? Like, if that kind of mentality starts to set in, then we might be in for a pretty rough patch. In fact, a few years ago, I said that regarding EVs, like one of the things that people kind of rely on when they trade EV stocks is that EVs are basically priced like tech companies, the Silicon Valley mad geniuses, whereas sometimes they're literally just Lego companies, right? They ship in different parts. Most of them are not even proprietary technologies, and then they just couple together a vehicle and then they sell it. So at some point I said back then that if the EV valuation starts to get challenged, people suddenly realized, oh, you know what, that thing is basically like the traditional manufacturers. And then this may trigger a different kind of slide. So we have to worry about the fact that Palantir's industry might go through something similar as well. I'm not saying for sure, but I'm saying that this definitely has to be a possibility that we have to take into consideration. Now, Palantir is getting attention from, you and I because of its potential to run very high, a pretty successful business model, the mysteries around it, and minimal dilution for foreseeable future. There are, of course, challenges ahead, like the technical complexities and the legal problems that may be possible, but its positive indicators are what keep attracting the public, which is its successful business model, the positive cash flow, and the fact that it's always, or at least often, perceived as one of the stocks that may just react based on the interest rates decisions or any sort of geopolitical changes. So for that, I would say that Palantir should always remain on one's short list or the watch list, and to always consider if they should have some Palantir in their portfolio. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Now, to conclude, my opinion on Palantir since the very beginning has been relatively bullish. That's for the long term. Like, in the absolute, I do believe in this company. I do believe that what they do is actually useful and needed by the market. It may not be as cool as it seems in some people's eyes. It may be a company that at some point will have serious legal contingencies to face. But overall, I would say that it's a pretty decent company to consider having. Now, with that being said, the current the current price action would suggest that if you don't have any like Palantir shares, maybe you can buy a few and then to keep the rest of your money on the side to like slowly trickle in. Whereas for people who already have a position in Palantir, I would suggest to slow down your purchasing pace and to definitely keep your existing shares for the long run.